I want to talk to you about your trading, your investing strategy, and how you maintain a big picture outlook despite all these short-term consolidations. I feel like we've had some market environments that make it feel like they're changing in and out, but overall the big pictures kind of remain pretty steady. But when you're managing money, it's like, you're looking at these moves, like I said, I mean, they're, like you said, volatility, even for today, these retracements are pretty severe. So how are you going about maintaining that, your overall big picture outlook?
Yeah, it's a really great question. I mean, you take that step back, and a lot of people put out price targets, year-end price targets, and things like that. And I don't like to think in that manner. I like to think it more or less. Say the S&P, when we came off that March to April low, look, okay, if this is a real low, what's a 10% move up from here? And so that, and kind of looking at it from that angle, if we're gonna have a full extension breakout and then line up other technicals across there. So kind of building my near-term target in the case this is going to be a move higher. And that puts you about like just under 5,500 in the S&P. And, I mean, it's saying, okay, you want to be bullish. That's going to be your bullish. What's going to change that factor? Is it going to be, it's not just a close below 5,200 because we pulled back 1 or 2 or 3%. You may look to be trading it, but what's your bigger picture, and even farther than that? So if you take one more step farther back, I mean, okay, we're in an election year. We had a great start to the year. What are the probabilities that are being laid out for this year to type of year to continue after the start of that in the first quarter, during an election year? And so you kind of keep taking that step back and looking at a bigger and bigger picture, and not get caught in the intraday. I'll tell you too, going back to micros, not having to worry about like a 10-point or 15-point stop in an E-mini helps you focus on the bigger picture for sure. And looking at how where I manage stuff on the CTA, as well as manage stuff in a diversified securities portfolio as wealth management, they both complement each other, have made me a better trader on either side. So like a commodity trader is maybe a better securities trader, and securities are maybe a better commodities trader, and helping me keep that big picture in line. And as well, writing out every day. I do write like shorter term research for clients, but getting my thoughts out and kind of even writing it in a bigger picture before you get more granular helps keep your mentality kind of what is my ultimate goal here. And then, kind of reminding yourself too, is it, if you're not trading, trying to catch 10 points, E-mini S&P, what's your big picture here? Like so is it that 10% move from the low through March and April that takes you to 5,500? Okay, then what's your bigger picture if we get to 5,500? What is this year going to bring you? What are the probabilities of this year going to stay and to see new highs, maybe 5,700 before the end of the year? And then kind of extrapolating on that. But I don't like to think too far ahead. If you start getting too many things in the mix, but you also want to play devil's advocate to your view. What is going to change your view? Where will we have to close below in the S&P to change my view that we're in a intermediate term bull market right now? Maybe it doesn't break the bigger, broader bull market, but what would say that we're going to go test and maybe have an October move against that September low like we did last autumn? And so what would that happen? What would make that happen in my mind? So kind of just keep testing that view as well. It's not easy, but trying to focus on what's your bigger goal is really what the idea is.